Welcome to TradeDMBI.com. This is John. This report is for the 23rd, and well, you can see that volatility continues to remain the basis for October's trade, and it hasn't slowed down. Of course, the government shutdown is still continuing now, the longest, recorded and no end in sight. It's just a strange thing. It's all over, healthcare and spending lots of money, but but everything still continues regardless of that. It'll get interesting when paychecks aren't being made, and that's when things are going to start to get a little bit rougher, I would imagine. But the Democrats in this case have been on the losing end of the argument. People see through the farce of it, and they understand that we spent too much money. And we continue to spend way too much money, and that continues to put pressure on the economy. From a daily standpoint on our charts, we're still magenta over. So, from that standpoint, not horrible. What we did get, though, was that spider I was talking about on the DOC here, which is where uh, cyan moves above green. So, it's just a lack of real motivated interest in buyers in that, but it's not enough to really drive things much lower. But the shakeout is just not healthy, particularly at these levels, because uh, you really need to see that starting to move towards the positive side if you want to expect any significant breakouts. So we're kind of like at a hold position, so to speak. And you still got plenty of short interest with the MBI white where it is. So you've got the fire, the spark that's built in there. The question is, do you have an impetus to drive things? And at this particular stage, you don't have that. Now, if you get a resolution of the budget situation or whatever, yeah, you may see that skyrocket break out. So uh, that becomes the question. And, of course, there was supposed to be the meeting between Trump and Putin coming up. That's not happening. The EU saboteurs seem to have thwarted that, and that's added tensions uh, globally. So you're going to have that risk factor that's starting to grow now from a geopolitical standpoint, and I think that's probably going to put some pressure on things. And certainly we saw that reflected in oil. Um, and we'll get to that one in a second. Treasuries, of course, you know, while it's a backstop, mostly now because of the crypto carnage. So the fact that what happened in the crypto markets, it really spooked a lot of people. So your choices then are what? Treasuries and gold for the most part, and that's what caused the explosion in gold. From an oil standpoint, you can see it right here. There was the major jump, and there were quite a few reasons for it. Not the least of which is the continued attacks on Ukrainian to Russia supply infrastructure, but then also the added sanctions that were just being put in. So that doubles it. And then the U.S. is playing this card of, hey, you're going to have to buy only from us. And, well, that makes sense from a nationalistic standpoint of, hey, buy American. Uh, it does put a squeeze on things. How much can they actually supply? And, is the U.S. now going to become the new Saudi Arabia of supplying oil and natural gas to the world? And it's, generally what the idea is, but we'll see how it plays out. And of course, the Europeans still committed to buying $1 trillion worth of U.S. weaponry. And you had the UN right there for with Trump talking about how they were going to buy more U.S. weapons. So again, that's where the weapons trade. So you cover your defense side of it, and then the energy side, and it's very supportive of the economy, especially going into next year if they follow through. I have doubts that the EU can actually do that, and I think the euro is probably going to express that. And this is where the real crisis for Germany and them, because their whole base is being undermined from their own internal policies and then broadly to these geopolitical ones. So it becomes very painful. From a gold standpoint, you had a little base fill here, not only filled, part of the positive extremes, just right there. So it was modest at worst. And again, this is what we talked about. You would get the bullish side of it once the steel came back above negative 13. There it is. So that will be more than enough to break past the 76%. Need a little momentum build. From a crypto standpoint, they suffered reasonably, at least Bitcoin did, but it's already brought itself back up. Now you've got a short cover rising here where shorts are built into the thing, expecting further declines. And That's always an opportunity to go against the grain. ETH suffered a bit more as it moved to the 0%. Um, and again, we're just right back at the ranges that they were at back in August. So for all the drama, it's not a whole lot of anything. From the 50K standpoint, we knew that we had this MBI white spike, so it was just a matter of waiting for the next move of that. And then what happened is you started getting a decay of the magenta here until it finally broke below the 25. And once it broke below that level, all that was needed was the MBI white crossover. And when that took place, which was right about here, that's when things started moving. So we expected that move. From the spike to a minimum of 50%. And once it happened, you had MBI white leading throughout that. And so that move to the 0% was not surprising, especially since you saw how weak that magenta reading, down in below the 10 level. So it was a significant amount of weakness built into that. And then you got the exact turnaround here where magenta moved back above. On the crossover of white, and you had white leading with magenta, and that is a short cover rally, and that pushed you right up to that 50% mark. And so now you've got another MBI white spike built in here. The question will become, when do you get the crossover of magenta? And that's when you'll have, and since you're above the 50%, the expectation will only be the 50% at the primary, unless there's a broader MBI white lead to it. So it's a pretty clean way to see how it's played out. And broadly, you've got a move here that came back 50% of it, and from a broader institutional standpoint, that's just a classic trade. So look for that 50% buy back in. Intraday, it was just pretty much straight ugly. So it was all those put buyers kept adding in there, and there's calls had to be wiped out. Then you reversed at the end of the day and took out the puts as far as all that gamma from the option standpoint. In the Europeans, well, actually, the Asian session went first here. It was pretty benign, and now in the European session, it's just a little back and forth weakness here built into it. So all clean. Can't complain about any of that. It's pretty straightforward. We'll wait and see if anything new develops, but just continue to follow the readings. As always, trade well. Anything relevant, I'll put in our team chat.